But Abhishek Goenka joins in now. Abhishek, towards the end of August, most of us believe there was very high importer crude demand that was putting pressure on the local currency. We at least believe that come Monday, so come 3rd of September, there will be some relief on the local currency. None of that has happened. We stand at another gap down on the currency. It's another low being made on the local rupee. How much more pressure? I mean, where is this stemming from? Because more than dollar strength, this is now playing out to be rupee weakness.
So, I think it's both the factors. I mean, yes, lately we have seen extreme depreciation of the rupee, but I think about 72, 73 would be kind of fair, looking at the real effective exchange rate. And if you look at other emerging market currencies and Asian currencies, they're also moving in tandem. So I think the policy of the RBI is very clear that it will not want an artificial...
I'd like to intervene there. I don't think emerging markets are moving in tandem. The rupee is down 10%, followed by the only other currency that's looking as bad as the Turkish lira and the Argentinian peso. Even the Chinese yuan, I know that's pegged, but that was a country that was under maximum amount of stress in Asia, has actually held its currency out. So we really have been the worst performing currency without any material sort of reason for the same, right?
So I think we are just looking at a 6 months or 1 year perspective. I mean, we have to look at a little longer horizon. In the last 3-4 years, we have seen an extreme carry happening in the dollar rupee. And rupee has been appreciating despite the fact that the real effective exchange rate had gone up all the way to 118. So now when it's actually rebalancing, all the appreciation that it had in the last 3-4 years, but actually if you look at the numbers in the medium to longer term horizon, then you will see that it's not very shocking. I mean, for a 4-5 year horizon, rupee is fairly valued. So I don't see that, yes, there is an extreme panic in the short term.
Yeah.
But then I think the number is fair. So, and lastly, in the last couple of days, whatever developments have happened, so it is the first time that we have seen a reaction from bond markets, that is, the bond yields hit 8%, the stock markets went down and the rupee depreciated. Yeah. All the three things happening together, which had lost its correlation from a very long time.
Right, so Abhishek, from where things stand right now, do you think the correction is done? And if you also look at history, right, 2003 saw a very sharp fall in the local currency, followed by 2008 when the rupee fell again very sharply. Again, it saw the same sort of move in 2013 and now it's 2018. So every 5 years, it seems like the rupee has it quite rough, probably a balancing act that takes place. But from where we stand right now, do you think the rupee is corrected enough and it's 71 half, 72, maybe the rupee is topping out?
I think the number we shared last 3 months back was around 73. So I think we'll stick to that. Any number close to 73 plus minus 1-2% should kind of be a top for the rupee. And over there, I think strategic inflows would start coming in because the numbers would get very lucrative, 12-13% depreciating the rupee. The flows that has to come, I think they would be if the carry has to again start like it happened in 2013 to 17, then I think it will be an opportune time to start having investments in India back. So
right.
72, 73 is something I am looking at.
Abhishek, what are forward premiums at? What are you telling your exporter clients to do right now? I mean, are they all completely hedged? Because if you're topping out at 73, I'm assuming the same impact would be seen on forward premiums too.
So forward premiums have gone up slightly higher, but it's not something which is worth mentioning. I mean 4.5% like that, 4.26% of the right range. In terms of export and import clients, I mean we've been going very, very slow in terms of our export bookings. I think we will start, whatever bookings we are doing it through options. For importers, we are not waiting at all. I mean we just
not waiting at... Right. And what happens to all that, FCNRB repayments, interest redemptions, interest payouts, importers in a bit of a tough spot, you think?
Yeah, they are a little concerned. Obviously, after the rupee broke 70, I think people were comfortable with 69 because RBI was predicting 69 many times. But I think post 69 break, they have been a little nervous. But then, if you compare with the earlier depreciation, as you mentioned, in 2008 and 2013, the move was 25% plus. So this time the move is around 11-12%. It's still, acceptable. But obviously, if things escalate before elections or things go really haywire with regards to oil then in that case, obviously the depreciation may not stop. And that would be too much disheartening for the importers. Till now, I think they are taking the pain in the stride that they have won the carry the last 3-4 years. In 1 year, if they have to pay 3-4% difference, they're okay with it. But yeah, as you mentioned, that if it goes up, then yeah, it becomes.
Oh, it's all sorts of numbers are in the rounds right now, Abhishek, and that's what's interesting, right? When we were strengthening, we talk about levels of 60, when we are weakening, we're now looking at levels of 80. It's anybody's guess, but for now, another weak opening on the dollar-rupee pair. 71.31 is where we stand at, and it seems like the fair value of the currency is 71.72. So some